All right. Yes. So today, y'all know I'm always like, listen, I don't care about the indicators. I don't really be focused on using indicators and all that. However, in 2023, I'm 100% focused on my indicators. Okay. Like I'm in tune with them. It's not that I don't know how to use them. I just, as a supply and demand trader, they don't really be necessary. Right. But listen, we've seen what's up. We understand what's up. We all made it through the month of December, whether or not we made it green, red, or yellow, or just barely got out that mug alive. It's cool, right? It's cool. So today, like I said, I want to go through some indicators with you, but we're gonna do that starting like every week, just going through different indicators and different trading strategies. But today I want to start off doing with our moving averages and what time frames you want to use, what moving averages on, and how you want to look at them and all of that, right? So I know that a couple of weeks ago, 2 Sundays ago, we did a little bit talk about those moving averages that you want to go in there and use on those higher and on what time frames that you want to use them. And specifically, we were talking about like on the daily. So there's 5 moving averages at all that I use. And the only difference between the biggest difference between the simple moving average and the exponential moving average is purely just that the exponential moving average is more weighted. It's more weighted. So, or it puts more weight on price moves, like any kind of change in direction on the price. And so it's just gonna like move a little bit quicker. There's nothing wrong with that. But if you're using like the EMA on these smaller time frames, it's going to adjust to a price move quicker and it's gonna move. And so like, let's say you have your 5 or your 8 pulled up and you're on your 5-minute time frame and you have the EMA pulled up. That EMA is gonna move like with a quick price move. Like, so if you have a pullback or something and it can fake you out. It can help you be faked out on like what the direction of the move is. The simple moving average moves, it's the first one, right? So it moves more in tune with like the literally with the average price. The exponential, like I said, at some point in time, someone just invented it because they were like, oh, the SMA moves too slow, so we're gonna double down on the calculations of it. And then that's how the EMA came up. So there's really not that much difference. And I just prefer the SMA. I just prefer the moving average, just a personal preference. Okay, so the ones that let me hide this. The most typical moving averages that you will see is going to be your 9, 21, 50, 100, and 200. Okay, now, as for me in my house, I just truly don't understand the 9 and 21. I don't understand it. So I move mine up to the 10 and 20 because for me, there's 5 trading days in a week, typically. So I might as well, I just want the 10, right? I want my 10 pulled up. Make sure that y'all have y'all's mics muted because I am recording this for YouTube, right? So y'all have the content to go back and watch it. So make sure y'all don't record me, okay? Don't mess with my money because YouTube gonna pay me for this content, right? So make sure that y'all don't record it because it's gonna be up on the YouTube page immediately after we get done with the study session. But all right. So that's for me, like, because like I said, if like with the 10, if there's typically 5 trading days in a week, I want the 10. I don't understand the 9. Okay. Now, some people also use the 5 and the 8 when they're on lower time frames. And that's because the 5 and the 8 is going to work in congruence with those retracement levels. If you're using Fibonacci, the Fibonacci retracement, which I have pulled up, you all. I have began utilizing my Fibonacci retracement levels again, but sometimes I take it off because I just be like, this is in the way. I already drew my supply and my demand levels. Don't actually really need it, right? I just be like, I don't actually really need this. Okay, so when you're on your daily time frame, the ones that you want to be in tune with the most is going to be your 50, your 100, and your 200.
It's 1811. By the way, you have a new notification. Do you want to hear it?
Oh, hold on, y'all. Let me stop. Let me pause this recording really quick. So the 200 moving average, that's going to be known as your like the value moving average, like the value zone. If you're trading above or below, when you see it, the price cross above or below your moving average, that's just letting you know, I like to say market sentiment. Like, does the market believe in this? So we see here on Disney, right? Disney been below their market value. They've been below their market value since like 2021. So when we're looking at this, we really just want to keep the 200 in mind and watch it for like when the price is moving up on it. So when we're looking at Disney, because Disney is one definitely on my list this week, y'all. When we're looking at Disney, it's nowhere near that 200. So that's, that's nothing that I'm looking at. Now I want to go to the 100. The 100 is, think of this as the price dip on higher time frames. Okay, so it's going to be like the price dip. So you'll look at it as support, like on higher time frames, right? So we'll support our resistance. So when we see here on the 100, it's really not showing us anything different than the 200, right? We're not seeing anything different. Now, one thing though is when you see a smaller moving average, the smaller time frame moving average cross over or below the longer time frame moving average, and this is going to be with any SMAs that you pull up on any time frame, this is letting you know if the smaller moving average crosses below the larger moving average, is letting you know that the price is going to go down. If the smaller moving average crosses above the larger moving average, you could expect the price is going to go up, right? So we see in here, right when this would have been beautiful, right? And you would have been able to buy this up at the top. Y'all see that? Like, how cool is that? You would have been able to buy this up at the top when you saw the 100 cross below the 200 right in here. And it was still up and just been able to hold it. And you see that. Now the price did break above the 100 right here, but it stayed within this channel, right? It not only met up with our supply zone up here, but it did not even reach the 200. Didn't even come up to the 200. Okay, then next we have the 50. I love the 50. Now, the 50, I rarely use it on these higher time frames. And when I'm saying higher, I'm saying the daily or higher, right? I will rarely use the 50 on like on the daily and above, but of course I'm going to pull it up sometimes, right? Because I like to use it in congruence with the 100. So we'll look at that in a second. So if we're looking right here on Disney still, right, we see that it is in a wedge. It's forming this wedge in here, right? In the last 2 days, we did have this move coming up above it. We did have this move where it broke out of my resistance, came up here, and then it met this 50 right here. Now, y'all see that 50 is right here at my reactive level, right? Y'all know like I always offset my structural levels with just like a different color and a different, like the dotted lines or the dash lines or whatever. So we see it came up Friday and met that 50 and rejected it. Okay, so if we're saying that the 100 is like the price dip for higher time frames, the 50 is also going to be like the middle price dip. And I would say to use it on the 4 hour below, but the fact that we see it here on the daily as well is beautiful, right? Now, look how this is still the 50, and I just moved it down to my 4 hour. And look at that. Look at that. You would have been able, you see what I'm saying? Like, this really works. The 50 really works the best on the 4 hour or below, and just being able to see it. So we see like here, it came above, pulled back to retest at 50. And then y'all see that? Y'all see that wick coming up off of it. And then the next day, y'all know we love to clear a level without it touching it. We get this wick, that in there. So when I'm looking at Disney, it is this 95.70 that I am watching. I am watching this 95.70, and I'm looking at it more so for a rejection, right? I'm looking at it more so for a rejection. The reason why is because look at RSI. If we look at RSI right here, that price is too far above momentum. And momentum is basically showing us volume as well, right? Like the price cannot be trading above the average volume. It just does not work like that. So if I have my 50 pulled up, I love to use the 50 with my supply and demand levels, right? But also VWAP. Okay, there we go. All these colors in here. Now, it'll work better on the 4-hour time frame, and I want to show, on the 1 hour below to use the 50 and watt together. Make sure y'all's mics are muted, y'all. So I like to use it, it'll work better like on the 1 hour, but let me show y'all what I'm seeing in here. So you see how like my upper band is the red one right in here. It attempted to come above it, but came back down right there. You can see it here, but also look right there. This needs to come on back down to my 50, which is also going to be a break back below my 90, my demand zone here, and as well as back inside of my resistance trend line. So come back down to at least this 89 to meet the 50, right? Because again, the 50 is known as like the middle price dip, as far as with the moving averages. So looking at this, honestly, y'all, if we just go across the board, like let me pull up SPY real quick, right? If we're looking at SPY and QQQ, like just to look at those, well, there's also what I wanted to show y'all right there too, right? We did get a little bit of movement out of this tight range that this has been in on SPY, but look at it, rejected that 50 on the daily. On the daily, we love to see it. I need SPY to come on break down. I need SPY to break this 370, to be totally honest. That's the move I'm waiting on. Please, like, by the grace of God, break, or 375, break this 375 so I can day trade it down here to this 370 and just go and break this 370 so we can swing trade this. And these are my levels that I'm looking at to carry it down for a swing trade. But so what I wanted to show is if we're looking at SPY, like, and we can like on the 1 hour and below, it's just way too overbought. It's way too overbought. It's too overbought, too high above, too far above momentum and all of that. Y'all, like the market, it has to come down a little bit. Now, am I saying that this is when it's going to start just like the world is ending on it and we're going to begin all that? Not saying that, but it does, it needs to come back down. It needs to come back down. And also my little pockets wanted to come back down because I'm still swinging SPXU. I got into a call for SPXU that is not profitable right now, but I just see SPY coming back down. It just needs to. It keeps up with the 50. It always comes back to meet the 50. Really, the price always comes back to meet just about any moving average, right? Because you can't be too far above the average and you can't be too far below average, right? Just like when we're in school, if you're testing above average, they move you up. If you're testing below average, they hold you back, bring you back down and do all of that. Girl, you see me in here trying to teach, you know. Okay, so let's go back to Disney. All right. Ooh, look at that right there. Look at that right there. Y'all see that? Come in. This got to. Y'all see that? I would love, love, love to catch this move. And this would be a swing trade because Disney does not move like that. We start to see any sort of weakness in the market, feel very confident on this for this pullback, but I would wait for it to cross below 92.30, right? If it crosses below this 92.30, the chance, and then we see it like a candle on the 1 hour close below like this 92.30, we could believe that it's going to come on down here to this 91.18, and that'll still be a very nice move. But y'all see that's demand easily. Okay, now so on the 1 hour, the moving average that you really, really want to be in tune with is going to be your 10, right? Because the 1 hour, y'all know what I like to say, the 1 hour is like the assistant manager, right? Like you can get stuff done for the day. You can get stuff done for the day. So if you're on your 1 hour and looking at 10 days of past price movement, that's gonna get you right. That's gonna get you right. Like it will pretty much hug the 10. And if you if you see it hugging the 10, that's when you want to leave it alone. That's when you want to see it, leave it alone. You want to take these moves when you see it move or when you see it break above and below the 10 on your 1 hour, right? That's the type of moves that you want to go in there and take. So I was looking at, where was that pin bar? Because like, look at this, right? Look at that. We see like the rejections off of it right here. You see the full momentum coming up right here after it based, right? So now we know that this was accumulation and it broke above. Same thing here, over and over and over, right? You want it when you see it pretty much wick off of the 10 moving average on the 1 hour. So at the end of the day, how I like to use the 10 on the 1 hour is when I'm going through like my watch list at the end of the day, I'll start, well, I'll say pre-market, right? Like I start on the 1 hour when I'm going through my watch list pre-market, like around 8 a.m., kind of like right before I'll start. That's like around the time that I'm posting the watch list, right? Because I want to see like, where's it sitting at pre-market in relation to my 10 on the 1 hour, because that's going to let me know like today what direction that I am expecting for it to go. So if I'm looking at this right now, of course, we don't have any pre-market action, but Disney rarely has any trades pre-market anyway. So if I'm looking at this right now, I would be saying, also looking at RSI, right? Extremely overbought. I would be looking in here and saying, okay, I want a break below my the moving average, which we see right here. The moving average is at 93. The moving average is at 93.22, right? So I want the break below 93.22 to carry down here to the 91.18. This is the moon that I want. And if we were to like measure that, right? Because I've been showing y'all this measuring tool, that would be a very nice day trade in there, getting a 2% move. That'd be a very nice trade in there. So watching that one. Now, let me go back to the daily actually. And we're going to pull up the 50 and the 100. So the 50 is purple and the 100 is this light blue. Now, when you see you know how we talked about the crosses from the lower, from the lower moving average to the higher moving average, looking at those crosses. Now, this here, hold on, child, because let me throw myself off. The 50 is purple. Okay. This right here, when we see the 50 cross below the 100 right here, this is a death cross. This right here is a death cross. And then, but because of our supply and demand levels, right? Look at the beauty of it. From drawing our supply and demand, we would already seen it. Wicks or tricks, we already would have saw it, but confirm the next day, right? When we see this 50 cross below it, this would be an amazing time to enter it into a put and swing it, okay? And your stop loss would be if it breaks back above the 50. If it breaks back above the 50, right? But it has not been able to do that. We've seen it reject like 1, twice, 3 times, right? So if it does break above and we see our level here, our profit target is just going to be here at the 100. Our profit target would be at the 100, right? Which again is in tune with our 99.38 that we already have over there. So we just want to trade it level to level. All right, so now let's go back to the 1 hour. Let's go back to the 1 hour. Okay, so we have our 10 pulled up. We'll have our 10 pulled up. And then when I'm on the 1 hour, I like to use the 10 and the 20. I'll change my 5. Actually, I need to have my 20 pulled up. So you'll be able to have all of these on here if you have the Pro Plus, y'all. Okay, it's that Pro Plus that's going to allow you to have all of these in here. It's $10 extra. I know it's still like, well, I ain't $10, but hey, you got to pay to play sometimes. Sometimes you got to pay to play, and there's certain things that we just have to go in and know that we're going to have to pay for. And TradingView is one of them, but it will help us make our money back, right? But so let's look here. Yeah. Let's see what time frame or what example do I want to use. Again, like right here, we have the shorter moving average, which is the 10 crossing below the 20, right? But again, we would have caught it off this rejection, but the confirmation came in here when the price also crossed below your 10, which is also giving us those 2 candlestick confirmations, right? And carry it back down to your demand level. and I just leave it alone, right? We always want to leave it alone when we see it wick off of there. And then the best time to re-enter is when you see them, like, do not mess with it when you see them converging together. So when something converges, it's coming together. When it diverges, it's moving apart, right? When you're using these moving averages, you want to make sure that they're diverging away from each other. Like when you're using multiple moving averages to give you like your entry exit signals and things like that, you only want to do it when you see that they are diverging away from each other, because that's letting you know that that price is going to be a good movement in price, right? Because the right now price is moving above or below. It's moving too far apart from the longer average. Think I made that make sense, right? So like right here, we see that as they cross, like they were just steady diverging. So it's giving you a bigger movement versus like here, where we saw that the longer moving average, which is my 20, this pinkish one, right, crossed above, but you see how they're converging and it just kind of like chopped your way up there. It's not what we want. We want it when they're diverging away from each other. So again, if I'm looking at this here, well, now that 10 is really telling me there. But so now let's look on our 5 minute, the ones that I like to use on the 5 minutes. So y'all know how I said, like, some people will use the 5 and the 8 because it is in tune with the Fibonacci retracement levels, right? So if we come in here and we have, well, I'll show y'all the 10 first, because I know that some people do like the 10, and there's nothing wrong with that, right? There's nothing wrong with it. Go in and see what it is that you see and trade that, right? Go in and see what it is that you see and trade that. So what was it, the 92.30 that I was saying, or was it the 93.30? I think it was on this 1 hour and looking. Yeah, the 93.30. Like in here, I'm pretty. Yeah, no, okay. I was gonna say, why would I say, yeah, the 92.30. Okay, want to make sure I have that in mind. So when we come over here and look, like in this 92.30 range, y'all see that there, like kind of like this giving you that previous resistance in there. So that's where we'd want it below there. But okay, so let's pull up the 10 first. Okay. Now, see in here, it lost this 10 as well, right here. We love it. And then especially if you can look at it with the 20 too, right? But I'm not the biggest fan of doing it. Like, it's too much data on the 5 minute, like 20 days of data on the 5 minute. That's like too much, because you see like it crossed above it right there, right? But look at the price. The prices, or I'm sorry, the shorter moving average cross below right there. And then we got that movement down, and it's matching. The 20 is going to closer match the momentum on RSI. And that's going to go for any time frame. Let me show y'all that actually. Like your 20 is going to closely match the momentum on RSI. And you really only want to look at that on the 1 hour and below. But okay, so we see that there, but now let me show y'all my 5, which is the yellow one in here. I like the 5 on the 5 minute, because if I'm trading on the 5 minute, I'm getting in, getting out today, right? That's something I'm looking at, getting in, getting out today. So I enjoy the 5 because the price is going to hug. It literally hugs the 5. It hugs the 5. That's all it does. It just hugs the 5. And the way I like it to use it is wicks, or if you see a candle, a bullish candle, open right on it and move up, amazing bullish signal. Or if you see a bearish candle, open right on it and move down, amazing, just amazing signs in there, right? So like, for example, right here, we see it wicking here, it would have got you this move down. So this, like the 5 is really good to use to show you, like, it's good to use if you want to scalp, especially if you are trying to scalp the open, have the 5 pulled up, okay? Not that 10. That's too much data when you're trying to get in and get out right now. The 5 is beautiful for scalps, as well as letting you see price changes. Come on. God. And this is why my camera be off most of the time, because these dogs just be, she doing the most. So again, in here, and so it is really good to use to just so you can see, like, to make sure like it doesn't make a huge move above or below it, right? So like this, obviously we want to, like you see this here, this is when we want to get in, so on and so on. So if we look at it in comparison with the 10, which is the green one, the 5 is yellow, the 10 is green. So if we look at this in here, and then also using them together, I do like to use the 5 and the 10 together. So you see this cross right here? This is good. This is good to use it for like intraday stuff. But again, you want it only when you see them diverging. So you see them crossing in here, but they're converged together, leave it alone. Now, right here, we see the beginning signs of it trying to diverge with each other, right? So I'll turn off the 5 so y'all can kind of see like the difference in here. Right? No one get like this, you know, but that's a personal preference. The 10 is not a bad thing to use at all. It's not bad to use, but I just wanted to show y'all the 5, right? So now if we have the 5 pulled up, and then we come over here and we do the retracements. Okay. It's the fact that she just sitting here too. It's the fact that she really just sitting here. This little girl is hilarious. I didn't mean to turn that off. I was trying to do this. Okay. Now, so on the Fibonacci levels, and we'll do this, I'll probably drop a class this week. There is one in the charting channel. If you go over, or I'm sorry, in the indicator channel in the resources on Discord, if you go over, Sky, get your butt down. Get your butt down. Because at this point, you're doing the most. If you go to the indicator channel in the resources, you'll I did put a Fibonacci video in there, but it was a lot of scorn because that was when we didn't really need to use all them indicators in 2022. So I'm gonna redo the video and I'll drop that for y'all with less scorn and more education, more instructions on how to use it. Now, so basically the Fibonacci levels, like retracement levels, the ones that you really, really want to be in tune with is going to be your 0.5 and the 618, but basically all of them. It's just showing you like where it'll pull back to, and you'll kind of see, like you see right here, it pulled back right here, pulled here. We got this move here too, you know what I'm saying? So using the 5 and then the 8, we'll switch this one to 8. Okay, Shaquille's in the building. Shaquille, are you here? I want to make sure. Yeah. Okay, perfect. I'm almost done.
Okay.
So, okay, if we have the 5, and then is this my 8? Yeah, the 5 is yellow and the green is the 8. So just coming in and looking at those, and we want to do it on the 1 hour. Apologies, y'all. I'm over here on live too, trying to answer these questions. So see here, and it pulled back to this 0.618, and then that's when you see it took off, it wicked off of it right here. You see what I'm saying? The 0.618, I'll do one at a time for y'all. So this one is the 8, you see right there, And we get this wick off of it and it moves up. It broke below the 8 right here and it kept up with the 0.236, wicked off of it, and we got this move up, right? So on this, and again, this is just too far above. Disney is just too far above. I don't think that we're going to get that push up to this 95.70. I don't see it happening, y'all. So that is what I wanted to show y'all for the moving averages and just how you can use them on different time frames. But so I'm gonna stop recording now so y'all can ask questions.